Hi everyone, I'm Ken from Crypto Trading KS and the CTKS method. If you're new, a very warm welcome and welcome back CTKS family. In today's video, we're going to look through the news and current events. We're going to do an in-depth dive on what's been happening in the past 24 hours, and just bear in mind a lot of economic data, important economic data, is coming out. Let's run the numbers. This week is going to be really volatile with the CPI coming out and the FOMC having its meeting. Also, unemployment claims and the PPI core and consumer sentiment are coming out. Prepare and strap in for volatility. Let's look into the current news. And in China, Bybit has opened its registration for Chinese users. Wow, that could be potentially very good. Apple has just announced iPhones can pay each other with their new service. I mean, there's tap to pay between iPhones now. Much to Elon Musk's utter disgust, Apple has introduced Apple Intelligence, the new OpenAI partnership that takes AI as center stage. Just in, the Optimus Tesla robot is expected to sell between $20,000 to $30,000. Wow, this is pretty interesting. And it's expected to start selling by the end of next year. Typically, when we get stock splits, we get positive momentum inside that particular stock, and that was the case for NVIDIA. It did a 10-for-1 stock split, and inside the service, the new release of NVIDIA, the indicator, and the levels will be coming on later today. The Canadian public company DeFi Technologies has adopted Bitcoin as its primary treasury reserve asset, and it really did well as a result. DeFi is the parent company of Valor Inc. Spot US Bitcoin ETF cumulative inflows are still going up. There's a lot of strong institutional interest, and I believe buying Bitcoin by companies is the next share buyback scheme. Now, what does this mean? Basically, as companies bought back their own shares, they increase the price of their own shares. Pretty neat. But that can only go so far. I believe we're going to see more and more companies adopting Bitcoin and therefore crypto. Plan B has come out with some scenarios on estimating Bitcoin's price. He expects by the end of the year, $150,000 for Bitcoin. Next year, $800,000, $400,000 the year after, $300,000 the year after, and $400,000 the year after. It's making, the current price sound like a good deal. U.S. independent presidential candidate Robert F. Kennedy Jr. is speaking at the world's biggest Bitcoin conference in Tennessee. In case you didn't know where Tennessee is, it's right here on the map. Paraguay has one of the largest hydropower stations in the world, and it's selling its excess capacity to Bitcoin miners. How cool is that? Racing across to the Netherlands. A greenhouse in the Netherlands is using heat from Bitcoin miners to save money on its gas bill. It's bringing together Bitcoin mining and tulip farming. If you've got a comment on that, please leave it. That's almost funny. We have one of the best communities on YouTube. If you're liking the video, please like and subscribe and become part of our global family. We'd love to have you here. In a bit of ETH news, James has said that the SEC just added ProShares Ethereum ETF filing to its website. And if you go to ProShares website, you can see that the featured ETF is the ProShares Ultra ETH ETF, targeting 2 times the daily Ether returns or the losses. Some really interesting things have been happening inside the main market, so we need to focus a little bit on Europe now. Europe has been hit by political instability, and France's Macron has dissolved the National Assembly after Le Pen victory in a European vote. He's just not happy. That sparked a quote by Jim Cramer, "Europe is pulling down the US this morning," which was met from a comment by a masterclass graduate, Alpha Harbinger. When you look at the knowledge that goes into this analysis, it's really impressive. Well done, my friend. We can see that when we look at the chart from LV19 inside the masterclass, Bitcoin is still doing really well. And the Japanese market and also the Taiwanese market are doing quite well. We can see the Russia's market and China's market not doing the best at the current time. And if you like this kind of video, let's do what Alpha Harbinger suggested and smash that like button, and don't forget to subscribe. We cover information on a depth that is unseen on other YouTube channels. And a big thank you to Mark for his very kind comment. For some people, this kind of information is a serious eye-opener, but we in the masterclass students know better. This is just a walk in the park for us. Thank you, Mark. One thing that you saw was the Russell 2000 coming down in terms of price. There's a reason and a logic behind this. The Russell 2000 came into an enormous area of structural resistance from 2067 to 2102. It simply couldn't get back and confirm it. It kept on failing as it was trying to get through this particular level to continue upwards. This is really the power of the CTKS method because we can figure out where the really strong resistance is and how price is interrelating and interacting with it. We're coming down to structural support at the current time. So in a time where most people would say, I'm getting the heck out of this market, we can see that the Russell is coming into support. And thank you very much, Fabs, for your very kind comment. We know that Bitcoin cannot escape the stock market's gravity. Bitcoin is this blue line. This is the S&P 500. And you can see the S&P 500 has a constructive method about it. It's looking pretty good. A lot of people will be concerned that the S&P 500 is about to drop off the off the cliff, but this is not the case. A lot of people are scared because of the Russell 2000 and what it's doing, and we can see when we look out and zoom out, it's become quite weak. But that was because of all this structural resistance above it. As a member of the CTKS Global family, you know things that other people simply do not know. And thank you very much to Purpuratum. And Purpuratum says, I don't dare even to think about how much time you invest to research all this valuable news for us. It is a lot of time, but hey, I love you guys. We have the best community on YouTube, and I'm really happy to put the time in. And Kate is also so incredibly supportive. When we look at the main markets, what we've seen recently is this big drop-off in Bitcoin, which is this blue line, was caused by the yields spiking up, also the DXY spiking up as well. That caused gold to go through an enormous amount of stress. And as we can see, this rise in the yields and this rise in the DXY is starting to reverse. That's allowing gold to come back, but also allowing Bitcoin to come back, and also the major indices. The major indices are really strong at the current time. Also, don't forget around this time, with so much data coming out for the Fed, that markets tend to get really volatile. Don't let this phase you out. It's just normal. We know that no alt can escape Bitcoin's gravity. We love it when Bitcoin goes up, because when Bitcoin goes up, all the alts go up. It's fantastic. But when Bitcoin starts to drop, especially when it starts to drop very significantly, we see the alts coming down. And if these alts come down like we've seen, they can create some enormous buying opportunities. You can get into profit just about immediately if you're layering down with the CTKS method. But you must know what you're doing. When trading and investing, everybody has their own style, and just something to be aware of. On the 24th, there's $6.69 billion worth of derivatives on a max pain value of $55,000. In the last 24 hours, we saw total liquidations amounting to 93.68, and you can see the long liquidations 72.88. That's not really a lot of liquidations, and it's not like $1 billion or hundreds of millions of dollars. It's actually pretty light, and 51,091 trading positions got closed out. We can also see that the spot Bitcoin ETF inflows are still positive, but they've been declining. When we look across the liquidation heat map, we can see everything bar OM got whacked. As a global family, we have X-ray vision into the markets, into every chart, and we know what happened with total crypto market cap. It just couldn't get above this $2.561 trillion structural support level. It just couldn't confirm it as support. When it lost it, because the yields were spiking down, or spiking up, because the yields were spiking and the DXY was spiking. Dollar yen was coming up, the euro was coming down, the Aussie dollar was coming down, gold was plummeting. All of these things. Of course, Bitcoin was plummeting and the alts, but they plummet to structural support levels. If you don't know where the structural support is inside your chart, you're just guessing. It's really critical to understand where structural support and structural resistance levels are. If we cannot get above this $2.47 trillion mark and reconfirm it as support, and then reconfirm around that 2.5, it's just impossible for us to move to the 2.54. And just remember, this negative air gap becomes a positive air gap on the way up. You'll also notice something, a little indicator up here, which is going to be released with the indicators. It's going to be released after I do the service video. You can see here that Bitcoin has come up 14% in the past 30 days. It's also on the CTKS consolidation path at the current time. At the recording of this chart, Bitcoin was 69,490. We can see how it came up and struggled to get through that 70.53 level. It didn't even get above it and confirm it as support, which would open up this 75.87 level. That just didn't happen. So, what does it mean? There's a degree of negative momentum inside the market. Things are a little bit weak at the moment, but always have your three-dimensional risk management playing out. If we get a sell down, we would expect to sell down to the 67,000 and 66,846 levels because there's substantial structural support. A lot of people think that these are just very, very easy lines to draw. You need both level 1 and level 2 standard certification to draw these lines. These are the most statistically significant structural resistance and structural support lines in existence. Our community is so incredible. I love to see people just gaining control of their emotions and finances inside the market. Dinesh said something incredibly good. He said, I stopped looking at the majority of these charts over a year ago. He was talking about the charts that I posted from X/Twitter and other social media sites. Those charts tend to tell a story of the author, but we don't care about the stories of authors. We care about the stories of price. Dinesh goes on to say that they don't influence my own sentiments. He says, I was one of those who bought into the diamond hand narrative from Elon Musk in the last cycle, and he doesn't do that anymore. He just sticks with CTKS. Thank you, my friend. Those lines that were drawn up on Bitcoin and total crypto market cap, those lines are called CTKS structure, and it's all about structural resistance and structural support. And you'll find that CTKS structure determines price waves. One thing just to note, the NVIDIA update, because of that 10-for-1 stock split, will be coming out later today. And also the video for the service. I just wanted to include NVIDIA and the updated indicators that give you a look across the past 30 days and where price is at in terms of the CTKS path. Understanding where the path is really important. Kate and I also revamped the cheat sheet. This is the cheat sheet for yesterday. Now what you can see here is the 30-day price and the position of the CTKS path. You can get both from the indicators. It's just designed to make it so simple for you. Now you can see the VIX has been going negative, but yesterday, this is yesterday's data, not today's data, it was consolidating. The DXY was going negative, but it was very strong in terms of price momentum. The dollar-yen combo was strong in terms of its 30-day price and also following the positive price path. The US 10 was following the positive price path, as well as the 2-year, as well as oil. But all of these three charts have registered negative declines, declines over the past 30 days. This particular top row is what you want to keep in mind. If things are going really green up here and really green in terms of the 30-day progression of price, that signifies a lot of problems inside the market. So we go down and drop down to the level 2 to try to understand this. Junk, which measures risk on or risk off behavior, has been positive, but it was consolidating on the consolidation price path yesterday. We can also see that the euro was positive, the Aussie dollar was positive, and silver was positive. But gold and copper have been hit because of the yields explosion. We can also see that the euro was totally hit in terms of its CTKS price path, so it's moved to the negative. Gold is moving to the negative, silver is moving to the negative. This is of yesterday. I will do an update later on. We can see that when we move into the major indices, and the major indices control all of the markets, they're just so vitally important. We can see that the S&P, the NASDAQ, and the Dow were all positive for 30 days, but the Russell wasn't. And you know why the Russell wasn't, because we look at the structure. So whilst the Russell is going negative on the negative price path, the Dow, the NASDAQ, and the S&P 500 are positive. Well, they were yesterday. I haven't done the NVIDIA one because I am yet to mark that up with the 10-to-1 stock split. It is on the way. The really interesting thing, when we look at Bitcoin, total crypto market cap, Ethereum, and MicroStrategy, they're all very positive, but they're on the consolidation paths just currently. This new cheat sheet, as you can see, is in development, and it will be released after I release into the service. This new cheat sheet to be released is of course absolutely free, and you can use your indicators to fill it out. For example, yesterday, Bitcoin and total crypto market cap were both consolidating and both quite positive. Let's look at how they're faring up right now. When I release the new bout of indicators, they will have this capability. You can see that green is the 30-day price change. It's green. It's up 12.31%. And currently, total crypto market is just consolidating. So that's your yellow area, but you can just tick the box. When we look at Bitcoin, we can see it's up 13.92% over the past 30 days. So that's a tick in the green box, or you can just color it green. And the consolidation, that box, you can tick it or just code it in yellow. So we can see it's exactly the same with Bitcoin and total crypto market cap. My goal with the masterclass was always to get people to look broadly across all of the markets to understand what's happening, to be able to look at the news and say, I get that. To be able to comment like Alpha Harbinger. And many people inside the masterclass tend to meet very top tier people inside the finance industry or work in finance, and they can speak at a level of the major billion-dollar companies at boardroom level, and this is what it's all about. There are so many rules that we talk about inside the masterclass because they're really important. For example, when we look at Rule 225, that's all about Bitcoin not being able to escape the stock market's gravity. And if you're trading outside the US, external stock markets cannot escape the US markets or the US stock market's gravity. This is another rule. The way that this becomes important inside the cheat sheet is this analysis here. We look at the stock market, especially the high growth firms, and determine if the stock market is changing direction. If it's changing direction, it's going to come from this top line, be reflected through the second line, and eventually hit the third and fourth and fifth lines. This is exactly why you should do the cheat sheet, and it's available free from ctksmethod.org. This updated one will make its way out in a couple of days. I'll let you know in the video. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.